China is on edge, not because of a natural disaster or a currency collapse, but because of one word: tariffs. And they didn't come from a quiet policy meeting. These tariffs came straight from Donald Trump's economic war room, designed to reshape global trade and hit China right where it hurts. Behind the headlines, something much bigger is unfolding. What started as a political move is now a full-scale economic earthquake with three bold goals: to slow China's explosive GDP growth, to close America's $295 billion trade deficit, and to force China to open its market to U.S. companies. This isn't just about electronics and taxes, this is about global power. So let's break down what's happening, why it matters, and how smart investors might come out of this wealthier than ever. Before we dive deep, make sure to hit subscribe and grab my free guide 5-Minute Money Shifts, using the link in the description. This is your edge in a time when others are stuck on the sidelines. Trump's tariff strategy is a bold move, but it's not random, it's calculated, strategic, and it's aimed at stopping the one country that's been quietly racing to outgrow the United States in every major economic category: China. It's based on a very simple formula: slow China down, and America stays ahead. Let's look at the numbers. In 2024, the U.S. GDP sits at around $29 trillion. China, roughly $18.5 trillion. Now here's the kicker. If China keeps growing at 5% and the U.S. at 2% by 2075, China overtakes the U.S. as the world's largest economy. But if both grow at 2%, America holds the lead, permanently. That's the real game: economic supremacy. And to win that game, Trump's plan is targeting the two biggest growth engines in the Chinese economy: foreign investment, especially from U.S. companies, and net exports, mainly to the United States. To understand what's happening, you have to understand how GDP works. GDP equals consumption plus investment plus government spending plus net exports. For China, investment and exports have been the secret sauce. American companies, think Apple, Nike, Tesla, have invested billions in China, building factories, shifting manufacturing, and boosting Chinese jobs. At the same time, China has flooded the U.S. market with electronics, furniture, machinery, and more, creating a trade deficit of nearly $300 billion. In 2024 alone, the U.S. imported $440 billion from China, but exported only $143 billion back. That's a $295 billion gap, and Trump's strategy is designed to shut that gap down, fast. Here's the twist. It's not just about what China exports, it's about who's exporting from China. Most of the goods coming into America are made by American companies operating inside China. So Trump's move? Tariff the goods, but offer an early exemption window. Apple panicked. Tech stocks trembled. But Trump wasn't trying to break them, he was sending a message. You've got a little time. Move your factories out of China before the next round of tariffs hits. The first tariff was the warning. The next one will be the hammer. If U.S. companies move even half of their electronics manufacturing, say smartphones, laptops, and tablets, out of China, it could reduce the trade deficit by over $200 billion. That alone would shift the balance of power. You might ask, if we move out of China, aren't we just replacing it with another country? Vietnam, for example, is becoming the next big tech manufacturer. But unlike China, it's not a geopolitical threat. Vietnam doesn't have global superpower ambitions, it doesn't threaten the US dollar, and it's far less likely to become a military rival. So, shifting production to Vietnam, India, or Mexico, that's a strategic win for the US, and a slow bleed for China's growth. And that's exactly why China is in panic mode. You see, their economic rise depends on the United States, for exports, for investment, for leverage. If America pulls back even just a fraction of that, China's entire growth model collapses under its own weight. This is Trump using economic leverage like a master negotiator, because, well, that's what he is. While others play politics, he's playing to win. He's positioning American companies to dominate global markets for decades to come, and, honestly, every working American stands to benefit from that. This strategy isn't just about punishment, it's about negotiation. Trump knows China doesn't want to lose American business, so here's the offer. Open your market to American companies, level the playing field, remove your government subsidies, and in return, we keep buying from you. If that happens, companies like Apple, Starbucks, Coca-Cola, Tesla, and Boeing could gain full access to China's massive consumer base. That means, revenue and stock prices could really explode. This isn't just about tariffs, it's a chess move to open the world's largest untapped market. Here's what makes this so effective. China, well, doesn't have a lot of cards to play. Yes, it can threaten counter-tariffs, and yes, it can look to Europe or other partners. But the truth is, the United States is still China's largest trading partner. The moment American investment pulls back and exports slow down, China's GDP growth drops. And once that happens, the long-term math shifts. China won't overtake the United States, the US dollar stays dominant, and American investors win big. If you've ever wondered how global power shifts happen without anyone firing a shot, this is it. Tariffs, trade, and 10-figure negotiations shaping the next generation of winners and losers in the global economy. Trump's tariff strategy isn't just smart, it's necessary. It puts America first, protects our economy, and brings manufacturing back home. Every American stands to benefit from this shift, whether it's through stronger jobs, fairer trade, or booming investment opportunities. Don't sit on the sidelines. Subscribe now and grab the free guide below to start making the most of this